Now, getting down to business today, we have a power-packed lineup with Soonicorn spotlight tracks, unicorn playbook sessions, investor roundtables, an open house later today with the Karnataka IT Minister, Mr. Priyank Kharge, and finally, a stand-up act at the end of the day. We also have two thematic report launches, dedicated sector tracks on maritime, AI, deep tech, and space tech, and real-world insights from entrepreneurs, investors, and policymakers. May I now invite all our guests of honor for the inaugural session onto stage. Mr. Rajat Tandon, President IVCA. Mr. Tandon, can we have you on stage? Mr. Mohandas Pai, Chairman Aarin Capital and Manipal Global Education, Governing Council Member, CAFRAL. Mr. Purushottam Kaushik, Head, Center for Fourth Industrial Revolution, India World Economic Forum. And Archana Rai, Editor South, Economic Times. Welcome, gentlemen. Welcome, Archana. In line with the initiative's aims of spotlighting sunrise sectors, our inaugural speakers will speak about unlocking new growth opportunities for startups and enabling the rise of future unicorns from sunrise sectors. May I invite our first speaker, Mr. Mohandas Pai, to deliver the inaugural address. Mr. Pai.
Folks, it's good to be here, especially to deliberate on this topic, because the time is right. Like Archana said, just yesterday we had the 109th unicorn. Abhishek should certify that. He is the certifying authority. And it just means that the time is right for Soonicorns to become unicorns. But let's pause a while and understand what is happening in this country and where we are today. The startup ecosystem has around 100,000 startups who have created $500 billion of value with 108 plus 1, 109 unicorns. These unicorns before Zepto have created about $350 billion of value. India's got about $140 billion from 2014 till 2023 June into startups and venture. I think we have maybe 1,200 AIFs today and maybe 2,000 fund managers. So these are very large numbers, and this has happened in a matter of maybe 8-9 years from 2014. 2015 was the inflection point for India, because that's the time when Prime Minister Modi on Independence Day announced Digital India, Startup India, Stand Up India. I don't think many people in this country understood what is Digital India, Startup India, Stand Up India. But he had the vision to say that, and soon thereafter they set up the SIDBI 1,000 crore fund of funds to invest into funds. And that is the start. But underlying that is a very big global phenomena. 250 years ago, the world changed forever because of the invention of the steam engine. That brought in the age of the machines. Till then, China, India were the largest economies in the world because we had very rich agricultural output, we had a highly skilled population, and manufacturing, like textiles, was essentially by human muscle and animal power. Then came the age of the machines, and Europe dominated the world for the next 250 years. They created the global supply chain on the Industrial Revolution, controlling the world, controlling how do you connect with consumers around the world. And this means shipping, transportation, railways, retail, wholesale, and financial services, etc. And that is dominated by the West. But 15 years ago started another phenomena, the rise of the internet. Internet as a platform connects people seamlessly, synchronously and asynchronously around the world. And that set off the digital revolution. We are in the midst of the digital revolution. And that is going to change humanity forever. And that's going to change business model. It's a global phenomena. 8 billion people, 5.5 billion people have a mobile connection, 5.25, 5.3 billion people are on the internet, and maybe 5 billion people are on social media. So today, anybody joining the internet can connect with producers and consumers seamlessly. The internet gives us education, gives us entertainment, gives us access to medical health, gives us access to financial services, and many things else. And that is the default. the default medium for most people in the world today. I am part of the analog generation and partly digital, because I was born a long time ago. It's analog world, partly digital because I worked at Infosys. Now all of you are the digital revolution, maybe Meta, but a young person of 13 to 15 is part of the Meta generation who moves from virtual reality to reality seamlessly and leaves the different world. And if you see the interaction in the world is entirely digital and it's happening in our lifetime. So just imagine next 10 years, what could happen? And this, India is the third largest digital power in the world. And this is there because we have a fantastic software service industry. We must remember this. Last year, the software service industry exported $200 billion, $135 billion of cash came in. Nilkan Mishra wrote an article, for Axis Bank, that the surplus on trade in services was $198 billion last year. And our peak deficit for trade in goods was $270 billion. And in 3 years' time, we should be having surplus on services of $265 billion. That means our service export and the deficit on goods import because of oil will match. And that's the day when the currency will become more powerful. So we won't have money going out. So the Indian software industry employs 5.5 million people, exports $200 billion. We probably export more software than Saudi Arabia exports oil. So 1% of India's working population exports more software services around the world than Saudi Arabia exports oil. 60% of global outsourcing comes here. Of the top 10 software service companies, the market value, 5 are Indian. Of the top 5, 3 are Indian. Of the 3.2 million people employed in the top 10, 2.3 million are Indians. And about 2 years back, India hired 500,000 people in technology. No country does that. This is the third largest power. The only thing we lack is capital. And I was telling Meloni, and capital, because people in Bombay invest in real estate, stock market, gold, and all kinds of things. They don't invest in innovation. Of the $140 billion that's come in, 90% is overseas capital. I told Meloni, we don't need Bombay's money. We can raise money from the world. It doesn't matter. But Indians have to own innovation. Indian capital has to come in. And Indian capital is reluctant to come in, and that's a big tragedy because Meloni has not connected Bombay to Bangalore. So you got to blame somebody, and she's here, and you should blame her, not you, Archana. You're doing a decent job. And we have to tackle this. What is lacking for India is capital, and capital is in short supply. From 2014 till 2022, the US invested $2.34 trillion into venture and startups. China, $835 billion. India, $134 billion. So we are fighting this battle for global domination. And India has got something that's very unique, and that is digital public goods. Over the last 12 years, we created Aadhaar. Based on Aadhaar, we had the Jam Trinity, opened 500 million accounts. We gave an identity to 650 million people. And we have UPI to transfer money. 42% of global payments come out of India. About 9.8 billion transactions happen. $170 billion is transferred every month. These are huge numbers. And we got this in a public authority where you can log into with an API and then do many things and create this kind of innovation. The biggest fintech innovation in the world is happening in India right now in very many areas. And we see it in Bangalore. And I think it's important to get this context of all this before we talk about Soonicorns and unicorns. And I got a little bit of views on how should Soonicorn becomes unicorn and what should we do. And I think if we see this and go forward 10 years, we are living in the most exciting period of India's growth. And all of you are going to make it happen. You're going to conquer the world. You're going to create great companies. And you have the best of technology. You have the best of human capital. Financial capital will come. There's nothing that you lack except imagination, possibly, if we don't have enough of it already. Now, I want to talk about Bangalore, Meloni, because you are in Bombay and it's rather sad. Bangalore has 23 lakh people working in technology out of 1.2 crore people. 45,000 IT companies, 15,000 startups, 46 unicorns. Bangalore got about $70 billion of capital coming in from 2014, exports $80 billion of software. Bangalore hires 150 to 200,000 people in technology every single year. It's the largest pool of technology talent in the world, more than Silicon Valley. And India will have the largest pool in the world more than the United States by about 2025, 2026. The US has 6 million people, 1 million are Indians. Out of 5.5 working here, 3 work for American companies. Out of 10 million working for American companies, 4 million are Indians. We are a force multiplier for American technology. Bangalore has 300,000 chip designers and testers and embedded software people, the largest collection in the semiconductor chip area in the world. Of course, we have a traffic problem. We find it easier to go to the moon and land there than go from, Whitefield to airport or whatever it is. And please tell Priyank Karge that that is what he must do. Right? It's easy to do some seminars and all that, but he must improve the state of our roads and focus on that because we need to improve the quality of life and make people productive. So you are the biggest place in India, one of the greatest places in the world for innovation, and you are the right moment. There are many Soonicorns, I don't know, 250, 300. Abhishek decides. Every morning he wakes up and makes a new list and gives it to Archana and they publish it. Whatever it is, they've identified some and I hope all of them become. Now, if you're a Soonicorn, potentially $400, $500 million going to $1 billion, what is it you must do to become a unicorn? What are people looking for today? I'm a bit traditional. I'm a finance person, so you must forgive me if I'm not somebody who says, just stand in the queue and take the money that's getting handed over. You must build a robust revenue model or a growth model. There are 3 kinds of technology companies. The first kind of technology companies is where the interface with consumers is digital. It's like Flipkart compared to Reliance Mall or Reliance Retail. Reliance Retail has stores, has goods, everything else. Flipkart has a portal, has a face where you can go and log in and get all the things done. Behind is the supply chain, behind is delivery, behind is accounting, behind is money, just like Reliance Retail. So they're all companies where you interact with the consumers, and that gives you an ability to scale up tremendously and reach consumers. Second kind of companies are companies who make software products and sell it to companies like a Microsoft, a Darwinbox, a Oracle, etc. And the third are algorithmic companies like Meta or a Google, which create algorithms, which create networks, and they work together. These are 3 broad categories of startups. And each has its own unique characteristics. But between 1 and 2, the important thing is people are looking for growth and revenues, not GMV. I remember many years ago, there was excitement in my office because people were talking about buying Apple computers. There's a portal from e-commerce company from Delhi, which is selling Apple laptops at 20% discount because they want a GMV. At 20% discount, you can sell it to the whole world and get $100 billion of GMV in 2 months, right? Provided somebody gives you $20 billion. So people are looking for real revenue, real growth, and growth potential because the valuation is a discount of the future growth potential. So you must get a robust model. You must make sure that you have built in and invested enough for the next 2 years. You must have 4 to 8 quarters of clear growth with 80%, 90% probability. And second, you must build a moat around what you do. What is so special about you that is very unique? How can you scale up more than anybody else? And what is it that you've got in terms of people and technology? What is your technology roadmap? And you've got to do that. And the third thing, which is very important, is how do you pitch to investors? There are only 2 things that move in the markets and for you, greed and fear. You've got to play on the investors' greed and show them you're the best company in the world, you're going to have the highest growth, you're going to do this, and you've got to make them say, gimme, gimme, gimme. You've got to sell. The biggest challenge we have as Indians is we don't know how to sell. We make great technology. An Indian will sell a $100 stuff for $25, feel sorry for the customer. An American will sell a $25 stuff for $100 and make the customer feel great. You don't feel sorry for the customer. You take the money from the customer or whoever it is, right? So you take money from the investor. Of course, you've got to be honest, use it properly, do the proper accounting and all that. So you've got to learn how to pitch and pitch with confidence. And you must raise capital when money is available, not when you want money. Nobody gives you money when you want money. You raise money when money is available. 2 years ago, $42 billion of capital came in. Last year, $25 billion came in. The year before the 42, $12 billion came in. This year, about 6 has come in. And Abhishek, we could get maybe 10, 11 or 12, right? Next year, we could get 25, 30. If the checkbooks opened up, it seems like it's beginning to open up right now. So you got to learn how to pitch, you got to go to people. But before that, you got to map all the investors who want to invest in your sector. Going to investors just for raising capital may not help you. When you are in startups, you know you need capital 2-3 years. You must identify all the investors you want in a cap table and go meet them, talk to them every quarter, send them information to keep them up to date about what you're doing. So the day you want to raise capital, you can go approach them and they should be willing to sign a check. And then make sure that you have got your accounting up to date, your legal due diligence, everything else. Due diligence is a nightmare. We have a big problem with lawyers in this country. I've dealt with lawyers in India and the US. The lawyers in this country is every young lawyer wants to prove he's smarter than the rest and add more and more things to the shareholders agreement and everything else just to prove how smart they are. They don't go by standardized things. They're willing to waste time. So due diligence legal is a nightmare. Accounting is a nightmare. Even the big four have the same problem. They want to prove that they know accounting more than IFRS or any standard setter. So get your accounts up to date, get your audit up to date, keep everything ready, and you must keep everything ready as if you are ready to go raise capital in 15 days notice. And remember, when you go raise capital, people say they have to do due diligence, they have to do everything, so keep all that ready and invest in a nice finance team. Finance is not an illusion, it's real. So invest in a nice finance team and make sure structures are there because you need to grow and you need to raise capital. And capital is available. And today, capital is very cautious. There is fear in capital, not greed. Greed will come after the fear goes. And we see more and more unicorns come. So I think the timing is right. You have to be prepared. You have to market. You have to pitch. You have to go meet investors, create interest. And nothing happens like magic. Yes, some things happened earlier when the market was very hot. Somebody gave a check, then they came and said, who's the next guy in the road? They gave a check to him. They did all kind of stuff, right? But we're not there yet. Once you get there, then you should be prepared to get a lot of money to carry with you. And please remember, if you take money at a unicorn valuation, the investors have to earn 25% on that. It's not cheap money. No money is cheap. The money given to you is hard-earned money of some investors. So they have to earn 25%. And you are supposed to generate the 25%. While you can be happy I became a unicorn, the next day you have to go to work and work 2 hours more per day to make sure you get those returns. Please remember that the money is not cheap. The responsibility on you becomes bigger. When you're small, it's okay. When you become big and take $250 million check, there's a lot of money riding on you. And you are the one who's going to make it happen. Nobody else. And you are sticking your neck. And make sure that you don't dilute too much. Just to raise money, don't dilute. I've seen some companies become unicorns where founders are 3%, 4%. What is the point of becoming an employee when you are an entrepreneur? Be an entrepreneur, a founder with 25, 30%. That means respect capital. Don't blow up capital. Don't give yourself fancy salaries. Don't give yourself a big car. Don't go first class or business class. Be frugal. Tighten your belts. Don't dilute too much. When you finally do an IPO and exit, you must have 50, 60%. You build the company. Don't convert yourself into an employee. That's the biggest mistake you people do. By diluting too much. But at the end of the day, the reward for all the hard work, the frustration, the dreams, the sleepless nights should go to you primarily and investors. And treat investors with respect. Have proper governance standards. They're all important. They may not be important to you. Many of you got capital possibly in the boom, but the important as you go along. Ask Abhishek. You took a traction public. Now you got to justify your price every single day, every single minute. Am I right? And you are in the public domain totally naked. Everything is visible. So the responsibility on you becomes very high. I want to end by saying, I'm happy to be here. I'm very optimistic at this point of time. And we have a target. By 2026, India should have 250 unicorns. This system should create 3.5 million jobs. And we should create $1.5 trillion of value from $500 billion or more today. That means the next 3 years, we've got to create $1 trillion of value here. And the field is yours. And you've got to make it happen. And you've got to plan for it. And work 2-3 hours more every single day. And dream big. Thank you.
Thank you, Mr. Pai. 250 unicorns indeed. May I now invite Mr. Purushottam Kaushik, Head Center for Fourth Industrial Revolution, India World Economic Forum, to say a few words. Mr. Kaushik.
Very good morning. My name is Purushottam Kaushik. I head the Center for Fourth Industrial Revolution World Economic Forums. It's a World Economic Forum's liaison office in India. It's amazing to see such a full house on a Saturday morning. And thank you so much for all coming over. Morning, when I was coming over and I landed, my sister messaged me from Chandigarh that, where are you? Like, you must be having some South Indian breakfast in your favorite place. But then I said, no, I just landed in Bangalore, and said, oh, you were gone for some Chandrayaan 3 event? I said, no, I am going for an Economic Times Summit. But then I think before I even go in, let's kind of applaud all the scientists who made it successful. It's like an amazing standing that we have got all across. Even if you read any global newspaper, any global channel, I think everyone is talking about it. So once again, thank you to all the scientists. I represent World Economic Forum in India, and the office which was opened up about 4 years back, inaugurated by the Prime Minister, and it was called C4IR, or Center for Fourth Industrial Revolution. For all practical purposes, even Prime Minister visualized that there is a strong need of looking at how 4IR technologies are going to be becoming the real solutions for the core sectors. And that was set as an objective. And core sectors would mean, I'm not really talking, still going into the sunrise sector specifically, but then let's say core sectors like agriculture, healthcare, urban, education. And that's what we have been working so far. Now, just before I even go there and touch some part of our work and what we have learned all through working with you all and some of the large industry partners, a lot of state governments, a lot of central ministries. But then just looking back, right now, we certainly are all, and this comes up in every discussion, that we are going to be third largest economy, say by next 2030 or maybe 32. And we will be like kind of, we are really going there. We are in like full flow with 7% growth, where most of the other economies are growing at maybe, or either going down or possibly will be growing at a 2.5% rate. Now, fact is that we are a 3.3 trillion or $3.4 trillion economy. Globally, the total share with, I think, total global economy is around $105 trillion approximately. So we may be around 3%, 3.5% as a number. But then certainly we are growing at the fastest pace. We are one of the largest economy. But then look at the GDP per capita. We are at around $2,400, $2,300 GDP per capita, compared to a global average of around 12,500. I'm not even like mentioning US, which may be 70 plus, and maybe Israel, which is 150K. So that's something which is a bit of a opportunity and a challenge also for all of us, that how do we make 4IR technologies, how do we make some of these amazing AI, IoT, blockchain, drones make to work for us. Now here we are at $105 trillion globally, and we look at last 12 months, what has happened in the market. Look at some of the amazing companies that have been building up products, and see what is happening in S&P 500. Now S&P 500, if you look at it, the total market capitalization of just 7 companies, the 7 companies have become almost like they're capitalizing 50% of the S&P 500. And these are the only 7 companies actually which have been showing amazing growth. And that's the reason why S&P 500 was showing positive trajectory. Otherwise, if you look at the remaining 493 companies within S&P 500, they are actually not growing, or actually they are the one who are bringing it negative. Now that's where this whole global dilemma of where we are and from here we go, where most of the investment houses, most of the large projections are showing that AI will take us completely in a very exponential path. And then in a combination, AI doesn't work in a standalone basis, AI works in combination of all the other technologies, whether it could be IoT, it could be robotics, it could be synthetic biology or blockchain. Name one technology which doesn't work in combination. But with opportunity of these technologies playing out, the $105 trillion global economy, like in a normal sequence situation, it would have maybe over 2030, it would have touched, say, $130, $140, $35 trillion by growing at around 3.5%. But just look at the opportunity where AI gives you almost like to a knowledge worker productivity, any projections like some saying 2.5x or someone saying 4x. But even if we say assume average, the knowledge worker productivity will certainly go much, much higher. And then add where our 5 million IT workforce sits, I think that's likely to be some investment houses saying 10x. So if the productivity goes up at that level, it's not going to be 130, 140 trillion dollars. Likely scenario, it may be 200 trillion dollars. But then that 200 trillion dollars, the additional 70 trillion dollar, where does it go? And that's the big opportunity which should, Mr. Pai mentioned, like 109 unicorns, likely to be 250 unicorns. So how do we really capture that value which is getting generated is going to be a big question. But then there's a challenge as well, right? The reason why I mentioned about S&P 500 and the reason why I said that 7 companies acquiring almost like 50% of the market value, now that's where this challenge will be. Because if you have all the resources in the world, if you have all the data in the world, if you have all the possible market capture, why would you let, or maybe how would you let others work in the similar environment? But that's going to be the unique maybe challenge for all of us, maybe in the next 7 to 10 years, how do we leverage this opportunity? Now, that's where we have been also trying to focus on, but we have been focusing mostly on looking at some of the internal core sectors. Now, let me just give you the first sector which we have been working on, and that's where some of the amazing opportunities that we have seen, agriculture. Now, obviously, like big numbers, 55% plus population is completely dependent on agriculture and their families. Now, unfortunate situation is that our landholding, average landholding is around 1.3 acre compared to a global average landholding per farmer is around 3.7 acre. I'm saying global average. I'm not even comparing developed economies having large farm sizes. But how do you make these farmers who just have an average landholding of 1.3 acres kind of make it work, technologies make it work for them? They are currently borrowing at almost like 24 to 30%. And 70% of those smallholding farmers, by the way, I'm not saying like just like a small number, 70% of those smallholding farmers are borrowing at such a rate. And just because there is no data available for funding them, it's a risky business. And most of them also don't even take their risk cover. I don't know how many of such businesses that we have here actually takes as much risk as a farmer does. He doesn't know his weather condition, he doesn't know the market conditions, he's pretty much not sure about his soil condition, and he is taking a risk of planting something which he will come out maybe over a crop cycle, and then he has to sell. Now that's the kind of a risk which is there, and also the lack of finance as well. Now going into this kind of a market, we were also not very sure of what will work here, because saying it's very good to present those nice charts and nice architecture of AI and solutions work, but then when you walk onto the ground, and that's what most of you do, and then making these technologies reach them has been one of the biggest challenge. So we have been working with various governments, and let me tell you one story which happened in Khaman. And let me say that in Khaman there is a chili is grown, so there's a chili value chain which we thought like let's kind of experiment some of the technologies, and there were a few startups from you only which came up forward and deployed only 4 use cases. One was looking at how possibly we can use AI for soil health, organic, inorganic matters. The second was how do you bring using AI and spectroscopy for quality, like giving a digital certificate to a farmer before he even goes to the market. And third was connecting markets, like finding the right buyer for the farmer, and then digital advisories. Now these are the 4 use cases which we looked at, and digital advisories again we just distributed on WhatsApp. We didn't really go hi-fi on like throwing an app or something, like only WhatsApp. Now, it's 2 crop cycles through, now almost like 14 months in Khaman, we did an impact study in report and third party, which went ahead. There has been with only, say, how much we invested? 1,700 rupees per acre, which is around $20, say. We got an incremental return of 64,500 rupees, which would incremental profit, I am saying, which is actually through a proper scientific study, which is actually, just imagine what kind of returns one can get with only 4 use cases, with 1 crop, and that too in 1 district. When you expand this whole maths, how much value it can generate, and that's where going to be an opportunity. How do we look at some of these and make it work? Another big intervention area which we had looked at was health. Now health has been like, obviously most of you possibly understand, but then again the challenge has been how do you take it to the last mile? While we looked at the whole landscape of various diseases and the burden, we went much deeper in cancer. And now, just let me give you one example. In Meghalaya, there is a district called East Khasi Hills, which is having a population base of approximately 700,000. The cancer, it's a kind of a cancer capital of India. It's the highest cancer incidence rates, and then all kind of cancers, but one of them is esophageal, and because of this supari eating habit and stuff. Plus then they also have breast cancer, which is another big challenge within the same district. And Meghalaya Chief Minister was very keen to how do you look at bringing in 4IR technologies to really solve some of these fundamental problems. You know what is the fundamental problem? The cancer is detected almost like 8.5, 9 months later than first detection. And because of this delay, the casualties rates and the cost of cancer care goes much, much higher. Forget about the other things of having no insurance coverage and the last reach. So what we did is that we just looked at maybe only interventions of 3 or 4 use cases. One was how do you enable AI in the hands of ASHA healthcare workers who are going deeper down and then actually checking with the, doing a survey and doing a possibly a health check on the ground level. Second was how do you increase the primary healthcare capacity, which was actually the oncologists, number of oncologists in the country are very small. They don't even live in cities like, states like Meghalaya or possibly, most of them are in bigger cities. Now, but then the real cancer care happens through the primary healthcare systems, which are on the front. And then after screening, it comes in. So how do you enhance the capacity of the primary healthcare ecosystem, giving them technologies? And third one was creating an oncology data bill. I don't know how many of you possibly even know that the cancer is not even is a notified disease. It's practically just kind of there is no data recorded. Most of the patients who go into even the care systems fall out of the care system because either the cost or because of the pain they cannot take or because of the lack of education, whatever may be the reasons. But that's the reason how do we don't even have the data systems ready for that. Yes, government has been working on various contexts. So we created a standard for an oncology data model. Now that's something, as a combination of these, we are trying to see how do we, and currently all these solutions are being deployed. One of our partners, Apollo, has been working on the ground along with the political and the government machinery. And we are seeing some amazing results which are coming out of East Khasi Hills. The reason why I'm mentioning these examples is that there is a huge opportunity for many of our startups here to look at some of these core areas and then make it work. Another big landscape was urban, where we have heard of smart cities. We have possibly all kind of cynical views about obviously doesn't work, and many of these solutions are possibly just maybe only for visibility's sake or whatever. Now the bigger issue is that if you look at the city ecosystem, there are obviously multiple institutions who are managing the cities. If you go deeper down into each of them, whether it's a transportation or whether it's a disaster management or whether it is going to be energy, they're all managed under different ecosystems. But then how do you enable some of the city leaders to really look at how the potential of these technologies can work for them? And that's what we created, something called AI Playbook for the cities. And we're seeing, yes, it is I would say 30,000 feet or 20,000 feet level. Still it has to touch ground and there are other issues. But then the opportunities are immense even in the urban landscape. And also in education, I don't want to kind of go there with too many of such examples, but then all of us understand how possibly we can leverage the technologies for making these systems work. One of the biggest enabler, and then so far why people don't want to go to government or maybe in a G2G or a B2G situation is that it's so difficult to work in kind of an ecosystem. We have been very focusing on how would public-private partnership work. And when we say public-private partnership, is how can government be an enabler and possibly custodian of responsible deployment of technologies, more of a protection. That should be the role of government and not really a procurer. Because government in this current scenario, even if you go to the senior most bureaucrat, it's very, we should not even expect that they will be knowing the latest and the greatest of what you know about technologies in terms of how possibly AI is changing the world. For them, it's they just want to learn and they understand and possibly see the impact. So how can government play a role of enabler and more of responsible deployment? And then on the other side is big industries. The big industries are mostly product focused, and that's what we have been our realization. If we say agriculture, most of the big industry is either into input like fertilizers, pesticides, or machinery. And then possibly some of them on the output side looking at how do we really buy these commodities and process them and then sell them. They are possibly not, they will never be able to having those niche solutions to make it work. I mean, where do you find a front-end fintech player who goes in, builds a khata book for a farmer, and then able to create a cash history, use AI, and able to give them loans at a much more institutional rate. By the way, the average difference between an institutional rate, which is like today given from banks, and then even if you add NBFCs ahead, versus what the rate today they are borrowing, is almost like 10.5% differential, which will give additional $25 billion opportunity purely in this sector if we are able to somehow bridge this gap. So that's something which we are seeing, that how do we really make the industry, startups and government work together, and that's pretty much possible. And that's where what is also happening in the case of healthcare ecosystems, where we had seen that while it is okay to kind of talk of this framework, but unless we brought in Apollo, unless we brought in government, and then unless we brought in another 7 or 8 startups who are working along with Apollo there to make it work, it's very difficult. There is kind of a very nice ecosystem which need to be built to make it work. So that's something which is on the public-private partnership that we are looking at, and it's an important role. But then coming back to the core bigger opportunity that we spoke about, in terms of that $70 trillion opportunity which sits with us for the next, say, around 8 to 10 years, is we have all the base fundamentals which Mr. Pai spoke about. We have possibly the youngest workforce. Technology-wise, we possibly already have made our base. We have such a big proven ecosystem of startups. I think it's just a question of for us that how do we find ourselves, and instead of like saying that yes, we'll be the third largest economy, we should be able to say that how do we really become on a GDP per capita basis also one of the major workforces. Maybe learn from some models like possibly Israel, where they're focused on innovation, and innovation doesn't mean like we should all look for like more jobs and maybe which comes to us because of maybe cost advantages, but then also slowly technology advantages. But then we should be looking at creating IPs where we can shift this whole disparity between the value shifting which is going on in the larger global pool, and we bring back value back to our country and use this as an opportunity and make it another Chandrayaan 3 movement. Thank you so much.
Thank you, Mr. Kaushik. May I now invite Mr. Rajat Tandon, President IVCA, to deliver his address on this subject.
Hi, good morning, everyone. My role is probably of another teacher when 2 of the gurus have already talked, and maybe here I'm on a little bit of a repetitive session, but hopefully I can keep your attention for a while. ET, thank you very much. It's a great day. We'll be doing this. You've given an opportunity for some of the people to actually come here and share what they are doing. Mr. Pai, you're always inspiring. Your speeches, I mean, I always try to figure out what next. You've already set targets for me also sitting there on the mic, standing on the mic, so I respect that. And again, ET, thank you very much. I mean, after the 2008 downturn, I'm meeting my old friend, my colleague from Nortel, Puru, where, like Mr. Pai put across, from the analog world, we were moving from the analog world to the digital world. So I think we were part of the transition, setting up the infrastructure in this country. So, like we were talking about, sorry, I'm going to be using a couple of slides, and that's the, yeah, if that comes across. So I think there was a discussion, if Bangalore is for innovation, Mumbai is for money, well, Delhi is probably, we are looking at ease of doing business. So hopefully all the 3 big boys come together, and the entire country participates with a lot of ideations. And we are building the unicorns which you are going to be soon, however respecting money. So I'm at the IVCA, which is an association for all the investors. So your PEs, your VCs, your real estate, infrastructure, LPs, the investors, family offices, corporate VCs. So we are a bunch of about 350 odd members at the association. And if I look at the total, probably 80% of the AUM in this country invested is from members of the association. So what I intend to talk about very quickly today is about, the potential for India, which we've been talking about. Also in terms of the ecosystem, how well it has been doing. Funds, the availability of funds. We've all heard about funding winter, etc. Well, we'll probably touch a bit on it. India's TAM, which is really exciting. And finally, performance, which is what's the need of the hour. And finally, a look at the little bit on the sunrise sectors. Now, here, if you look at it, the recent announcements from Delhi, from the Honorable Prime Minister, putting across the PM e-bus Seva, which is 54,000 crores going to be invested in this particular, direction. So climate focus on EV is fantastic. Another $1.4 billion, $1.83 billion coming in for, digital India expansion, which Mohandas Pai also talked about, whether it's the UPI, whether it's the ONDC, and there is a hidden gem as well, which is the Unified Health Interface, UHI. So hopefully that can be also taken across to the markets. Our GDP is going to be fantastic by 2030. So per capita is going to be about $4,000 by 2030. So we're looking at something really good. About 17 cents per GB for internet costs, cheapest in the world. We have over $100 billion committed and raised by the alternate investment funds, which are funds registered in India. They are global funds and they are Indian funds, so funds registered in India. Again, 66% of the population, we have a very young population here. We have the number of UPI transactions, which Mr. Pai also talked about, is phenomenal, and it's only growing and spreading across the world. So something built in India for Bharat is now going outwards. So the India stack, UPI stack is ready for the globe at this point of time. And I think more additions will come up. The GDP is much better than China. Even the average domestic credit cost is 50% of the GDP, literally 1/3 of what it is in the US. So which is where, there's a lot of exciting times for Indians here coming up. Smartphones, we know the penetration. India stack, fantastic. Equity market is doing phenomenal, 5.3 trillion, probably 5th largest globally. And more every month we hear about more money coming into the mutual funds. So hopefully a lot of more money comes into the startups world as well in alternate funds. 450,000 jobs created by the unicorns in the country. Again, in terms of, the number on the Soonicorns and the unicorns will keep changing, so hopefully we can get some latest updates here. My numbers are about 3 days old till we have the success story. And hopefully when you guys do it in Delhi, we may have some more Soonicorns converting to unicorns. Again, India has a zero probability of recession. So we are in a good state. Here is some, the ecosystem's stats. Today, when we started off in 2016, there were only 450 odd applications at the DPIIT portal. Look at it, in 7 years, we are 100,000 startups listed over there. It's a phenomenal success story for any country, and we should all be proud about it. 300 plus incubation setups, and even the government's putting in money to help the incubators to put the money into the startups. So 110 unicorns, 104 Soonicorns, numbers, as I said, would keep changing, but then look at the pace, 110 unicorns from 2011, where there was the first unicorn, to now, we've got 110 unicorns happening. Again, a 500 billion plus combined valuation, which is what is in the country on the startups. And the focus, if you see at the left, it's all about showing that they are profitability. So whether it's Idea Forge IPO which came in, investors gain, and it's all about investors gain over here. Zomato turning profitable. Urban Clap saying, yes, we are out. We've broken even in the first quarter for India business. Meesho is actually lodged for profitability. Small finance bank, Utkarsh, which got the IPO was just about 2-3 weeks ago, 60% premium over the IPO price. So these are some of the success stories which are coming up. While we understand startup funding has reduced, and that's typically in the growth stage, not really in the early stage. Early stage momentum is still pretty good. But the focus by the startups and the unicorn is all towards profitability. And that's an area which I think we should be completely looking at. Now, access of money in terms of during this time, really it's India's scenario is nothing different than the globe. When the interest rates were low, the money was available across the globe, and as you can see over here, the green line is for Asia, and North America happens to have the biggest chunk. But we are flowing as the international markets are flowing. So we are in good shape, and as you will see that the cost of borrowing the money is going to get higher, even though it's going to be a little tighter, but again, for India, we are quite confident that the success story will be very good. So today, dry powder is the money where people are keeping for allocations for successful startups, and probably, as we mentioned, valuations become so important. As we are seeing, even the expectations around valuation for startups, please do your maths again, homework again. Make sure that you keep selling to the investors, as Mr. Pai also said. Be good at your sales job too while you're building great products. So dry powder is going to be there. International money is also going to be coming in there. Hopefully at the association, we are trying to look at how we can help build more pools of domestic capital, because today 90% of the capital is still global. Out of these, during the pandemic, we had about $74 billion come in, both PE and VC. VC was about $36, $38 billion, which went down to about 24 in 22. The start of these 2 months, I think we are about 5.5, 6. So maybe end of the year, we are about 10 or 12. Hopefully it picks up much better. But again, there is money in the market. There's money in the globe. So it will be coming in. It's just that we continue to build properly and better. So there is certainly at this point of time, there is a little bit of a deployment delay. And maybe it's just a valuation correction which will take place. So the opportune moment for us is now. Time is now for us. And if you really see in this particular year, nearly about 38 AIFs funds have actually registered and closed. That means what they plan to, they have achieved in terms of the money they plan to kind of raise from the investors. Their commitments have come through, and nearly about $5 billion. So this is a good positive sign, positive story which is building up in India. Our TAM continues to be fantastic. You really see the low income group is shrinking, and even in the top, there is money getting, more people are making money. So there is a higher purchasing power for all of us. The areas, the sectors where you will see, right now, if it's 900 billion to, it's about 155 billion to about 175 billion, the entire size in 2022. It's going to be $1 trillion. That's where it's looking at by 2030. And this is, you will see that the kind of growth you will see, certainly, in e-commerce is an area where is where the maximum investments and participation has come. But, areas like health, that's where the number of X's, you can see 12 to 15X is the growth which is going to be coming up from these sectors. So clearly, B2B, B2C, SaaS, online, these are areas which you're all aware are going to be beneficial, and they are the ones which, most of you are going to be building around. I want to put this particular slide, which I found pretty interesting, and sorry for the 3 zeros. By the time I had, this was a 000 for all the quarters of the unicorns being cited in 2023. So, there's a change, and it's a very happy change. Again, this was an interesting picture which came up in, I think, LinkedIn, and I loved it, and I picked it up over here, and I'm sure you people may have seen that while, there was a strategy behind how unicorns, their purpose, and today in terms of, if you look at, the term was put as zebras, but it says like from, in terms of what we were before, exponential growth, we are looking now at a rapid growth. From really one of the best ones which I looked at saying competition, we are looking at participation. Right? We're looking at working as partnerships. So some of the areas where we have to keep brushing ourselves as we start building up and as we start moving on forward. And to me and to us, I think it's very important to become a performicon, right? Lovely words, but it's all about performance. And that's what the investors will be looking at. You have to be continuing to be, transparent with your investors. You have to believe in your reporting. So even at the SEBI, we are, at the association, we are looking at how the fund managers can actually start working on, self-monitoring and, RegTech, making sure that these certain things are imbibed by the fund managers so that there is transparency, there is more trust between the government, the regulators, and the investors. And certainly the trust has to be coming out from the side of the startups as well. So again, part to profitability is very important. And certainly there was ample lot of money to create new acquisitions. But maybe it's time as well to look at how these acquisitions can be completely retained, and we kind of milk them out or maybe juice them out for more top lines and more numbers which are having profitability for us. Exit strategy, keep that in mind the moment you start your day one, right? So that's very important. And again, please make sure this is not a wasted capital or this is not somebody's easy money. It's hard-earned money of the investor. It's a hard-earned money of the fund manager. So we have to get the return on the capital which the person has invested. Again, this is a risky capital, and that's why people who are investing into this seek for further better returns than the normal, when they're investing into private capital, private markets. Again, it's all about we creating an impact. It's good, and governance should be in our DNA in whatever we do. That will be the key. Finally, I just put across a slide which is on the sunrise sector. Last year, the number was about $9.5 billion. Till this first half, it's about $4.5 billion, and about 114 such investments being made in the sunrise sector. Now, our Honorable Finance Minister had announced, about a budget back, not this one, the one previous, about blended financing, and that was towards areas of sunrise sector. So at the fund level and at the member level, we have defined certain areas which are investable areas, whether it's a health, agri-tech, whether it's a deep tech, whether it's a climate and sustainability, and deep tech including drones, agri-tech seems to be very important. As you can see in terms of climate, the focus and the numbers have been very good. In 2022, number of deals were about 66, creating about $4.5 billion. In deep tech, which is around 168 deals, 3 billion. And that's where an area where I think we need to keep our deep tech in India. What's thought, what's innovated in India, let's look at keeping them in India. And that's when even the investors, we are seeing that investors, please come out and start building your skills, upgrading yourself. There shouldn't be only a 5, 10, 15 handful investors in tech. We should have, out of the 2,000 which are there, we should have 50% or 30, 40% at least as tech investors. And that is where we want to save our merits over here in this country. Again, bio and health, these are areas which are going to be fantastic for the future. These require growth money. As you can see, the value and the number went down. That's primarily because some of the growth money was not available. But hopefully as the channels open up, we can see more investments coming in that. Thank you very much and have a good day.
Thank you, gentlemen. May I now request our speakers and Archana to unveil the ET 50 Emerging Maritime Startups of India report. This report is produced by the Economic Times with research partner Traction. The report provides a snapshot of the startups driving the tech-led transformation of the maritime and shipping industry. If you'll do the honors. Thank you, Archana. Thank you. May I request you to take your seats?